The Indian rupee is crashing, and the Reserve Bank of India has been forced into direct intervention. Prime Minister Narendra Modi has ordered emergency action as the currency weakens sharply against the dollar. This is not a minor fluctuation. This is a dramatic, game-changing financial crisis with global consequences. The Reserve Bank of India, backed by nearly $700 billion in foreign reserves, has stepped into the market. Modi has commanded the central bank to begin selling U.S. dollars immediately. By flooding the market with dollars, India hopes to stabilize the rupee, which was sliding dangerously close to 90 per U.S. dollar. Economists have already warned Modi that the situation could soon become unprecedented. If conditions worsen, the rupee could fall past 90 and even touch 100. That level would be shocking for India, creating inflationary pressure, trade imbalances, and a political storm that could shake Modi's government. Why is the rupee collapsing so rapidly? The explanation is as complex as it is alarming. On one side, Indians across the country are rushing to buy gold. Families receiving remittances from the U.S., the Middle East, Britain, and Canada are converting that money into gold as a safe haven. With global gold prices hitting record highs, Indians are turning their cash into metal at a historic pace. India has always been the world's largest consumer of gold, but this time it's different. The rush is not about weddings or tradition, it is about fear. Ordinary Indians do not trust the rupee. They believe gold will hold value if the economy slides further. The result is skyrocketing gold demand. Yet at the same time, jewelers are reporting fewer actual sales because prices are too high for ordinary buyers. The wealthy are still buying heavily, but small households are stuck. They want to sell gold for cash, but the jewelers say there are no buyers. That creates a hidden crisis in the retail market. A currency collapse, a gold bubble, and a lack of liquidity all at the same time. Meanwhile, India's stock market is also under intense pressure. Market uncertainty has wiped out billions in value. The rupee crash, combined with falling equities, has created a dangerous sense of panic among investors. It feels like the ground is shifting under India's economic model. For exporters, a weaker rupee is usually good news. They sell abroad, get paid in dollars, and then convert to more rupees. But for ordinary citizens, it means soaring prices for food, fuel, and imported goods. Inflation bites hard, and Modi knows this could trigger public anger just as the opposition senses an opening. The international angle makes this crisis even more dramatic. Former U.S. President Donald Trump has accused India of exploiting America. He claims India has sold goods freely into the U.S. market while blocking American products in return. He is furious that India continues to buy defense equipment and energy from Russia instead of the United States. Trump has signaled that India could face more sanctions under CAATSA, the U.S. law targeting countries that do business with Moscow. For Modi, this is a nightmare scenario. More sanctions mean more pressure on the rupee, higher costs for imports, and possibly an accelerated path to that dreaded 100 level. At the same time, Russia and China are quietly encouraging India to diversify its reserves away from the dollar. India is already considering shifting assets into yuan, rubles, and even cryptocurrencies. China has already been selling U.S. bonds and reducing dollar exposure. If India follows the same path, it would be a major blow to U.S. financial dominance. The world is watching closely. The Reserve Bank's dollar sales have given the rupee a brief recovery. But this is a band-aid, not a cure. Reserves cannot be burned forever. If capital outflows continue and confidence collapses, no amount of intervention will prevent the slide. The geopolitical stakes are enormous. If India reduces dollar holdings and increases gold, yuan, and crypto reserves, it signals a break from U.S. alignment. Washington sees this as an economic rebellion. Trump, never shy of confrontation, has already warned Modi that America will not tolerate an attack on the dollar. This is more than currency policy. It is a clash of empires. On one side, the U.S. dollar, still the world's reserve currency. On the other, emerging powers like India and China experimenting with alternatives. Modi may not want a direct fight, but circumstances are pushing him into one. The Reserve Bank now faces an impossible choice. Keep defending the rupee and burn reserves quickly, or let the market decide and watch the currency crash toward 100. Either way, the pressure is immense. All eyes are on the next 48 hours to see whether India doubles down on dollar sales or shifts strategy. The domestic mood is tense. Congress and opposition leaders accuse Modi of mismanaging the economy, pointing to inflation, unemployment, and weakening investor confidence. Rumors of regime change swirl in the background. Russia has even hinted that Modi's leadership could be challenged if the crisis deepens. Meanwhile, China is flexing its military power, showing off nuclear and hypersonic missiles in a massive parade. Modi chose to leave early, signaling he does not see China as the immediate threat. Instead, his focus is firmly on the United States. The danger is clear. Anger Trump and India risks more sanctions, higher tariffs, and an escalating economic war. The trade tensions are already visible. Tariffs on Indian products have risen. Exporters face shrinking margins. Consumers feel the pinch as imports grow more expensive. Inflation threatens to spiral. The rupee's weakness magnifies every problem, and the Reserve Bank is running out of easy solutions. Investors call this an unprecedented test for Modi's government. It is not just about currency. It is about trust, leadership, and India's place in the global financial order. If Modi defies Washington and sides with Russia and China, India could reshape alliances across Asia, but the cost at home could be devastating. For now, the rupee is caught in the middle of a geopolitical storm. Dollar strength, gold fever, sanctions threats, and stock market panic have created a perfect storm. The next decision from the Reserve Bank will be critical. Will they keep defending the rupee, or accept the crash and save reserves for another day? This is not just India's problem. A rupee crash destabilizes global trade. Multinational companies lose confidence, investors shift money to safer havens, and most importantly, the perception that the US dollar is no longer untouchable gains strength. If India, with its massive economy, openly dumps dollars, other countries may follow. The consequences are staggering. A global currency realignment, a fractured financial system, and the possibility of the US dollar losing its status as the world's dominant reserve currency. These are not distant scenarios. They are real risks playing out in real time. All eyes are now on Modi, the Reserve Bank, and the rupee. The next week will decide whether this crisis calms or explodes into a historic turning point. One wrong move, and the rupee could break 100, setting off a chain reaction across global markets. We will keep following every twist in this shocking, game-changing story. To stay updated, subscribe now, hit the like button, share this video, and tell us in the comments what you think. Is India's fight with the dollar a sign of a new world order or just another currency crisis? Your voice matters here. Stay tuned, because this story is only just beginning.